So we've heard today a lot about energy security, resilience, investment flows. So I'm looking forward to getting into that. But of course, just to introduce you, I think maybe to the audience, you came to office in March of this year as Minister for Foreign Affairs, serving President Cast, who's of course seen as an important ally of Donald Trump in Latin America. So later on, maybe we can talk about a little bit about regional politics and global politics. But before all of that, you're here at least partly, I know you're going to ASEAN after this, but you're also here partly to bang the drum for this idea of Choose Chile. Can you tell us a little bit about your Choose Chile project?
Okay, I mean, one of the missions that I have from the foreign ministry is to help the country recover growth. This is an old idea that I got from President Macron when I was sitting on the board of a French company some years before the pandemic. He started with a program called Choose France. And one of the things we need to do in the case of Chile is to be able to compensate what we don't get from mining minerals in terms of the rest of the economy. And the key element there is human capital. And we need to somehow push the rest of the economy up. And the idea that popped in my mind was, why don't we borrow this concept that the French had designed to invite investors, and not only investors, but also people, to go to Chile and see whether they can operate out of there, either their industrial or businesses, but also the professions. So if we can get people to choose Chile, maybe we can compensate for what we're not getting out of critical minerals. We have a little bit of the Dutch disease in our country for some time. We used to grow at rates well above the average world growth rates, 5, 6, 7%. Today we are below that. And this has been going on for 12 years. And one of the things that we wanted to do coming into office was to go back to where we used to be. And that we need help. We need human capital, basically. We're going to generate it over time through education, but that's not enough. And that's the whole concept behind Choose Chile.
And just very briefly, when people think of Chile, they think of copper, they think of lithium, but what sorts of other industries are you hoping to attract?
Well, we have other industries already in the country. We're very, very large fruit exporters, also paper and pulp, fish, salmon. I'm probably sure some of the people in the audience have tried Chilean salmon. We compete with Norway there. It's a very unique thing about Chile, because not many places in the world can do that. But still, this is not enough. And that's why we came up with this idea. We need to... The spillovers of the industries that we have developed are not enough for the rest of the economy. Just to give you an idea, I mean, the way the mining industry works is you grab workers from all over the place, you take them into Antofagasta, they fly in, they pick up a bus, they go to the mining camps, they stay there for 10 days and go back home 10 days later, just to return a week after that. So the spillover or the other industries that have to benefit from this development are not getting enough. So what we need to do is to bring more talent, and so that we can add, what you could say, value added to what we're doing, downstream investments that will allow us to not only do what we're doing, but more.
And Japan and in Asia, Japan and China are obviously the biggest investors in Chile. Where do you see this extra investment coming from? Are there particular?
Well, our largest investor in Chile is Canada. Actually, the number 2 is the US. Japan is also very important. China is not so important in terms of investments. They are the biggest trading partner. They are the most significant importer of our goods. So we trade a lot with China. Around about 40% of our trade is with China. But of course, in terms of investments, the Canada, the US, and Europe come first.
And as discussed, copper is obviously your biggest export. When you look at Asia, which Asian markets do you think realistically can absorb more of your copper?
Now, of course, copper is linked to the energy transition and also to electromobility. So the industrial footprint is very important. So far, probably if you forecast copper going forward, some people say that 3-4 years down the road we're going to have scarcity of this mineral. Chile is investing heavily. The numbers are around about $100 billion for the next 10 years. And of course, it's highly concentrated because we need to expand the number of places that are buying copper from us. For that purpose, we need to move away from concentrate and starting exporting refined copper. That implies changing a little bit the footprint of smelters in the region, not necessarily in Chile, but in other markets like Europe, the US, or even Latin America. And probably China will continue to be a very significant client for our copper because of the industrial footprint they have. But as data centers, or as they call today, AI factories start to spread out around the world, well, of course, the demand for copper will be more widespread.
Mm-hmm. And right now, how are you seeing the demand for copper?
Very strong.
Yeah.
Very, very strong. Yeah. The amount of investments that are going into AI and data centers is huge. Of course, that implies energy, and energy has to be transported. The electrons travel through copper. This is the highway from the generators to the places where the energy is consumed, and that's a very, very important thing for our product.
So I'd like to talk a little bit about Washington. So you were recently in Washington.
That was a couple of weeks ago.
US Marco Rubio and other US officials, as you seek to protect your exporters from tariff measures. But what did you take away from those conversations, and how concerned should Chile be about the future direction of US trade policy?
I think that one thing that is clear to me is that after COVID, the trust in the supply chain that we have built after globalization was challenged. Probably the way the goods and services were distributed during the COVID period were not in proportion to market shares of demand before COVID. And that generated some anxiety and the need, or the thought at least, that countries needed to be more self-sufficient. And that generated a shift in terms of the production of goods and services around the world. And I think personally that it's a trend that is here to stay. So the globalization will switch to what I call probably friendshoring. And what we're going to start seeing is probably clusters of countries pulling together free market arrangements within themselves so that they can basically compensate for the fact that this global market that we used to have will be more problematic going forward. The last time that this happened in the world was in the 1930s of the last century. It lasted for 40 years. So I think this time we'll see this trend for a while. So that is why it's so important to travel, to visit our trade partners, to talk to them and to see what opportunities are there that we can exploit so that we can compensate and somehow not lose the efficiencies that we were able to generate through trade in this search for more security.
Mark Carney, in his now famous speech in Davos, talked about the need for the middle powers and perhaps also smaller powers to find their allies and to group together in this sort of shifting world that we find ourselves in. Who do you see as Chile's natural partners?
Well, we have free trade agreements with 90% of world's GNP. So we have a very large base of partners. Now, when we look at what we've done in the last 40 years, we haven't changed much our matrix of exports. 40 years ago, we were exporting basically minerals and a few other products. Today, we are, in terms of size, much larger in terms of what we export, but still 50% more or less the same products. What has happened is we have concentrated our client base. 40 years ago, 20% of our exports went to Europe. Today, it's less than 10. 5%, China represented around 5%. Today, it's close to 1/3. So we have the client base there, but we haven't been able to exploit our ability to sell products to them, neither in terms of the diversification of the client base, nor in the diversification of number of products. So what we have to concentrate now is to make sure that we're able to expand our clients and also expand the products we sell them. And for that, we need to start moving, using our feet. Contracts or treaties are not enough. They're just a starting point. So we need to travel more. We need to invite more our friends to go visit us. We need to see where can we cooperate in terms of what they do and we do. And that's a challenge today, to be able to do more with our friends.
When you talk with U.S. trade officials, obviously we are in the Trump administration is very, very different to the other administrations that have preceded, especially around trade. You were telling me before we came on stage that you studied in Chicago, so you were a student of free markets. But there's a lot of talk about how aggressive this administration is and how difficult they can be to deal with. When you're in a room with them, do you find that they listen to your?
Yeah, they certainly listen. What I know about trade, I learned from them. So and basically, free trade was the name of the game if you wanted to increase output. That's the most efficient way to do things. The cost of what you produce, or what you substitute, is what you stop doing in order to substitute certain things you're importing. So it comes from inside, and so the normal trend is to say, well, I'm going to specialize in the things I do best, and I'm going to import from you the things that you do best. I have a trade deficit with the guy that cuts my hair. Why should I care about that?
Right.
So the same holds true because I have a surplus with others, and I don't start cutting my hair to avoid the trade deficit with my hair. So that's the rule, and everybody knows that. Now, on the other end, there was the perception that trade was not fair. In what sense? That you certainly, tariffs were fine. Zero tariffs work perfectly, but there are other things behind the scene that can influence what you are able to import or export. And I think the feeling was that the world was not being fair, and I get the perception that the U.S. felt that they weren't being treated fairly in the way they were able to offer their products abroad. Now, whether that's true or not, it's hard to tell. But if you look at the U.S. economy, you know that they're basically at full employment. The unemployment is only 4%. So whatever they're not doing in terms of goods, they're doing in services. But if you go back again that's why I think it's so important to go back to the COVID days. If you go back to the COVID days, the sensation that was generated there is that if you weren't able to manufacture at home what you needed in a crisis, you were vulnerable, and that's there to stay for a while. And I think that to some extent what we're living now is precisely the sensation that countries need to be, or big countries need to be, secure in terms of what they can produce for themselves. Now, when you have smaller size countries like Chile or Singapore, we cannot do everything. So this is why with the same logic, it's so important to generate the coalitions of countries or markets that can help themselves and can decide what are we going to do ourselves and what are we going to import from you. But on one condition: if something bad happens, that I'm going to fairly sell to you what you have been buying from me, and you're going to supply to me what I've been buying from you. We're going to keep the rules of the game, even though we may face a difficult time. So I think that's something that you can work out in smaller groups. And we have, of course, several trade agreements and within the group, within different groups of the Pacific, for example. And this is something that we have to sit down and talk so that we can substitute in a way we're going to lose by this shift away from globalization.
I've got one more question for you on your sort of discussions with Washington. Are you actively looking for exemptions or carve-outs or a broader bilateral understanding with the U.S.?
Well,
of course, there is a close relationship, between the two countries, and the two presidents, share have some similarities in terms of.
Well, we have a trade agreement with the U.S., and that, as they have with others, this thing is being renegotiated on this new scenario, and we have to sit down and discuss how we're going to get out of this issue. Let me give you an example of things that happen, and sometimes the devil is in the details. We export chicken to the U.S., but we import chicken from the U.S. as well, and we have a trade equilibrium in chicken. Because they like to eat the breast and we like to eat the legs. And more or less we export to them as many kilos of breast as we import from them kilos of legs. I mean, what sense does it make? Shouldn't we have zero tariff for that? I think we should. And it's a true story, by the way. These are the kind of things that we have to look at. Or for another example, they eat fruit and we produce fruit, but we're off season with what they produce. Again, that's a win-win for us and for them. So there are lots of details, and we can eventually sit down and talk about them and make sure that we can still benefit from trade, so we can continue eating the chicken legs and they can continue eating the breast legs.
I didn't expect to be talking about chicken diplomacy here on stage, but it is what it is. We live in strange times. We're coming close to the end of our time, but you mentioned earlier, China, of course, is your biggest trading partner. You also have this very important strategic political relationship with the United States. How is Chile managing that juggling act, and how do you plan to manage that juggling act?
Well, we have to, again, we're a small country. We have to export to everybody. We trade with everybody. We have to be friends with everybody. And we don't have to choose. They're complementary. And we want to continue doing business with both of them. China is very important for us in terms of exporting goods and minerals. They're also very important in supplying to us a lot of goods that are basically very convenient for us. The U.S., on the other hand, is a very important strategic partner. We import from them lots of services. We export to them lots of goods, and we need them both. So that's the way we're going to develop ourselves. We're going to trade with everybody.
You said you don't have to choose, but have there been any moments where you felt like you're being forced to choose, or one of those powers is going to force you to choose?
No, we haven't felt that way. And of course, the art of negotiation sometimes implies that you bluff. But we can play poker as well. And one important thing to keep in mind is that negotiating is not the art of giving arguments, but the art of building up options. And that's where it's very important for us to expand our client base. As I was telling you, if you go 40 years down the road, we were exporting to a larger base than we are today. So we have to expand our client base. That's Michael Porter 101. I mean, diversify your client base. And we're working hard to do that. We went to India, I mean, like a month ago. We started conversations with them. We're negotiating a free trade agreement with India. We're talking to all of our neighbors to expand to modernize and expand our free trade agreements with them. But now talking specifically on things that can happen. And this is a very important element, so that we're not pressured to accept the idea that we have to choose. So it's the art of the deal. We have to be there every day, and very importantly, working with the private sector. They come with us to the trips, and they sit on the table. They talk to their potential clients. So, for example, we were in Indonesia yesterday. We went to visit a salmon importer with one of the Chilean producers, and that's the kind of thing we're doing. We're using our feet to solve the problem.
Salmon, chicken, there's more to Chile than copper, obviously. So.
Exactly, correct. But probably the one thing we want to do is move into the digital era. AI is very important. We're getting a significant investment in data centers and things like that. But that salmon and chicken will continue to be important.
Good. All right, Minister, thank you so much for joining us today. Thank you. Thank you all.